You are welcome to my channel. This is Kevin Davis. Now, I would like us to get a number which involves margins that it will enhance your understanding better and better. So I don't want to waste any time. Let's go straight to the question. So the question says, the summary of assets and liabilities of XY Limited as at 1st July 2016 is given below. Now, in this question, they've given us the summary. We have assets and then we have liabilities and equity. So we have our assets: cash at hand, cash at bank, furniture, inventory, trade receivables. Then on the other hand, we have capital, trade payables, rent outstanding. Now, in this question, what they have done, they've given us the opening balances in some sort of a balance sheet, which was the closing balance. So those are the opening balances that they've given us. Then, the following information is also available. Goods are sold for cash and credit. Customers who buy on credit pay by check. Then they've told us that XY Limited sells goods at a profit of 25% on sales. Payments to suppliers are made by checks. On every Sunday, every weekly collection are sent to the bank after paying out weekly salaries of 300,000. Miscellaneous expenses 50,000 per week, and then drawings of 100,000 per week. By 30th June 2017, the company had made the following payments by check. Suppliers 85 millions, rent 5 millions, insurance premium 1 million. Then they're saying the company had also deposited a total of shillings of 140 millions each bank account, where 20 millions of it of the amount deposited was received from customers who bought items on credit, while the remaining was cash. The following were the balances on the 30th June 2017. So we have trade receivables, which is 62 millions, trade payables of 64 millions, inventory of 50,400,000. Depreciation on furniture is provided at a rate of 15% per annum on the cost. Rent outstanding as at 30th June 2017 was 1 million. Required: prepare the final accounts for XY Limited. So that's the question that we are going to do. I know it looks somehow complicated, but we are going to try our level best to make it simplified. Now, if you look at that question, one, they told us that money is sent to the bank after paying out weekly salaries. So if you check in the question, they say that money is sent to the bank, or they say that payments to suppliers are made by check. Then on every Sunday, every weekly collection are sent to the bank after paying out weekly salaries. Now, we are calculating for a full year, okay? Now, since we are calculating for a full year, they are telling us that before money is sent to the bank, they first pay out weekly salaries. Now, the weekly salaries, if you can see, they are 300,000. Obviously, in the question above, in the balance sheet that they gave us above, there are 3 zeros. So that means this was the same as 300, just like that. But then, the telling bit is this. They told us that before money is sent to the bank on a weekly basis, we are supposed to pay out salaries weekly. Now, remember, we are calculating for a full year. But now they have given you a weekly transaction. Meaning, you're supposed to multiply these salaries by the 52 weeks in a year. Because there are 52 weeks now, when you get 365 divided by the 7 days, or the 7 days that make up a week, you get close to 52 weeks in a year. Meaning that for you to work out this number, you must first multiply the amount which is paid weekly times the number of weeks in a year. If I had said that we pay these transactions or these expenses on a monthly basis, it means that we would have multiplied by 12 because this is only monthly. But here they said we pay out weekly. That means you should be able to know how many weeks are in a year. And a year has 52 weeks. So meaning those transactions that were paid out weekly, you're supposed to multiply by the 52. So that we can get how much was paid in a full year. Now, that means that for all the transactions that have a weekly transaction in it, it means that we are going to multiply by 52. So when you get the drawings the same issue. You get 100 times 52, like that. Then they gave us miscellaneous expenses as well. We shall multiply our PPT times 52. Now, we need these transactions within our cash book. So meaning that for us to have our cash book right, we should be able to get how much we were giving out on a weekly basis, multiplied by the number of weeks in a year. So the number of weeks in a year are 52. So meaning that you multiply by 52, then you get the figure that was paid for the full year. That's what the question demands. So if it's weekly, multiply by 52. If it's monthly, multiply by 12. So if they tell you that the transactions are daily, then you multiply by 365 days. It depends on what the question demands. Maybe it is a leap year or an even year, depending on the question. So they have to specify for you in the question. Then they also told us that by 30th June 2017, the company had made the following payments by check. Payment to suppliers, of course, that's payment to creditors, rent, and insurance. Then lastly, they are telling us that the company had also deposited a total of 140 millions. So look at this. They're saying the company deposited into their bank account. They deposited 140 millions. But then they're telling us that out of these 140 millions, there is a 20 million which was coming from our customers. This question is so technical. Like I told that single entry is a very technical topic. It might need you to have to be technical as you go through the question. Now, here they are telling us that they deposited 140, but then out of this 140, there is a 20 million which is coming from the credit customers. Now, if you read the question at the start, they told us that goods are sold for cash and credit. But then they say that customers who pay by credit. Meaning that, sorry, they said that they pay by check. Meaning that if they pay by check, these 20,000 came in as checks. Because these are customers paying us. But then the question said that the customers who took goods on credit, they pay by check. Meaning that this money came in as checks. But then they told us that this money was all banked. Meaning that there's a 120 which was cash. Because the question said the remaining was cash. Okay? So since the remaining was cash, it means this was cash held by the business. So meaning it's the 20 millions that came in as checks that were added to what we had in the business. So if the business banked 120 million also, this makes it a contra entry. Meaning in our cash book, we are supposed to recognize this as a contra entry because it was cash which was banked. So meaning when you're doing up our cash book, we are supposed to recognize this as a contra entry. Otherwise, let us start the question with our steps that we mentioned in the first video, and then we come up with a statement of financial position. We start with the question. Now, I told you that when you're given a number of single entry, what you do, you follow the steps. This is the same as the procedure approach. And the very first step I told you was to establish the total sales figure. And this, we are going to have our debtors contra account, the debtors contra account. Now the debtors contra account, it looks like this. So you're going to have the receivables, the opening balance this side because this is an asset account. So you're going to have the balance brought down. And then you shall have the balance carried down this side. So if you check in the question, our balance brought down is actually 40,000. Now, this 40,000, I'm picking it from the balance sheet that they gave us at the start. So if you check the balance sheet, the trade receivables, the opening balance is 40,000. That means we look out for the closing balance as well. Now, if you check in the question down, they gave us and they said that trade receivables closing balance as at 31st, they were 62,000. So you bring the 62,000 here. Now this 62,000 is the closing balance, which is given at the bottom of our question. Then, if you check in the question, remember they told us that we banked 140 millions. Out of the 140 millions, the 20 million was from the credit customers. Meaning that the 20 million is going to act as our cash received. from customers. So our cash received is 20,000. Now, I'm removing the 3 zeros because the question demands us to remove the 3 zeros because the additional information is not subject to the 3 zeros. So that's why I'm removing the 3 zeros. Now, in the question, they didn't give us bad dates, they didn't give us discount allowed, they didn't give us returns inwards, meaning these are the only transactions that we are going to have in the debtors control account. Therefore, we can balance off the debtors control account. So you realize we have 82,000, 82,000. Now, like I said, we can't have another balance carried down this side because we already have one. That means now the balance, which is now 42,000, is going to become our credit sales. Our credit sales. So we are done with our first step, which was to establish the total sales figure. But then we have only found out the credit sales. Remember, the question was telling us that sales are made both on cash and credit. But then if you read through the question did not give us cash sales, meaning we are going to use the idea of the margins to find the cash sales. We shall come to that. Then let us draw up the creditors control account. So the creditors control account, like I told you, the balance brought down because creditors are a liability to the business. So liabilities have a normal credit balance. Therefore, the balance brought down for the creditors, if you can check through the question, it is 60,000. So you bring the 60,000 here. For the payables, it is 60,000. Then our balance carried down for the payables, it is actually 64,000. So we have a balance carried down, which is 64,000. Now, this 64,000 is given to us down of the question, the lower part of the question. That's where we are going to find the 64,000. Now, remember, they told us that cash payment to suppliers during the year, it was 85,000. So if you can check through the question, the payment was 85,000. So you come here and say cash paid, and that cash paid is going to become 85,000. So here we don't have any other thing or item that's supposed to come here, meaning that when you add the two, you're going to get a total of 149,000, and this side shall have 149,000. Therefore, the difference now, as our credit purchases, the difference is going to be 89,000. So these are the credit purchases. Now, in the question, we didn't have cash purchases, meaning that this 89,000 is the total we are going to take as our credit purchases. That's what we have. Then we draw up the expense account, which was the third option. So working 3. So this was working 2. So working 3. So the working 3 now, we draw up the rent account. Remember, they gave us a rent outstanding. So rent outstanding, since it is outstanding, it has a credit balance, which is the balance brought down here, and then that means balance carried down will be here. So if we check in the question, our opening balance is actually 2,000. If you see in the balance sheet that they gave us, then the closing balance is 1,000 at the bottom of the question. So they gave us 1,000 as the closing balance. Now, if you check in the question, they told us that where there's payment to suppliers, they also told us that rent was paid by check. So if rent was paid by check, how much was paid? They gave us 5 million. So you come here and say bank. I'm putting bank because it was paid by check, and it's 5,000, meaning that I'm going to get the totals here. So I'll get 6,000, and therefore my profit and loss, the rent expense I'm taking my profit and loss will be 4,000. That's how the question goes. So it means that we are done with the third step as well. We only had one expense that is subject to accrual and prepayment, meaning that it was only rent which was outstanding. The rest, we didn't have anything that was outstanding. Now, the fourth step is for us to establish the incomes figure. In this question, still, we didn't have anything concerning incomes. So that means that step, we leave it out. The next step was to establish the opening capital, which was to use the statement of affairs. Now, in this question, they gave us the opening capital, meaning that since they have given us the opening capital, we don't need to do the statement of affairs. That means we also have to leave it out. So the other next step, the second last step, is supposed to be cash book. So we're supposed to go up our cash book. So it means our cash book will look like this. It's going to be a 2-column cash book because we have opening balance for cash and for bank. So we have details, cash, and bank, like this. The same, we have bank and cash. So we bring in our details here. So this is our cash book. Now, I'm going to come to the concept of us getting our cash sales here. But I want to show the effect that once we don't compute for the cash sales, it's going to affect our cash book. So let me show you where the balance brought down or brought forward. Now, in the cash book, if you check in the balance sheet, the opening balance for the cash was 42,000, and then for bank was 70,000. That's the opening balance that we saw in the balance sheet. So these are the opening balances. So you bring the 42,000 and the 70,000. Then the next instruction was saying that these expenses are paid out every Sunday. We pay out these expenses before sending the money to the bank. So the very first one is salaries. I told you that we are going to multiply this amount with the number of weeks in the year. So if they give you 300, we're supposed to multiply it by the 52 weeks in the year. So meaning that for us to get how much was paid out of salaries, we are going to get 300 times the 52, and we are going to get 15,600. So we multiply. So make sure, because it's a weekly transaction. And then, since the instruction was out of cash, that means we paid this money out of cash. So it is under the cash column. Then the next transaction that we had was miscellaneous. The miscellaneous expenses. The miscellaneous expenses, we are going to get 50 times the 52 weeks. So when you multiply times 52, you get your 2,600. So that's what we have. So 50 times 50, because it was 50,000 per week. So you remove the 3 zeros because they are subject to 3 zeros. Then you get 50 times 52, you get to 2,600. Then we also have drawings. Now the drawings, remember, for them they were 100. That means you're going to get 100 times the 52, which is going to give you 5,200, like that. Then the next transaction that we had a payment to suppliers. Remember, they told us that the suppliers, we paid them on check. And now the cash book is there to record receipts this side, and then payments this side. So we have payment to suppliers. Payment to suppliers. But now they told us that this payment to suppliers, they were by check. That means our bank account is losing. So you bring your 85,000 here like this. Then the next one, under it is still rent. We paid out rent, but also rent was paid out of check. That means we also paid it out of the bank. So you bring the 5,000 here like this. And then the next transaction that we have still under the same Roman numeral, it is insurance premium. The insurance premium. And the insurance premium that we paid was 1,000. That's what we have that we paid. Then, if you look through the question again, after this, these are basically the transactions that are supposed to come into our cash book. But remember They told us that there was an amount of money that was taken to the bank. Not so. Now that amount of money, we're supposed to first see that we got some from the debtors. Receipt from debtors. Remember, we recognized it here as 20 millions. So we come and put it here as 20 millions to the bank. Because when the question was starting, they told us that those who buy on credit pay by check. Now, if those who buy on credit pay by check, it means this money here, receipt from debtors, has to come as checks. That means our bank account is increasing. Then they told us that the remaining amount, which is now the 120 millions, is cash. Meaning that this is cash held by the business. Now, if this is cash held by the business, it means that we are going to perform what they call a contra entry. So we are going to take money from the bank, from the cash, to the bank. So since the bank is receiving, we are going to put 120 millions here, and then we show that it's coming from cash. Contra entry. We come this side and say we are crediting money to the bank, but the cash is losing 120. Something like this. So that's a contra entry. Now, the contra entry, like I said in my video about the cash book, I said the contra entry does not indicate a significance in increase of money. It's just like taking money from one pocket to another. It remains the same amount of money, but then the place of custody has changed. Therefore, it's the same thing here. That now we are losing money from cash. The business is taking money from cash to bank. So you show that you're losing it from cash to the bank. So the bank is receiving, and then the cash is losing. That's what we have. Now, this is what I wanted to show you. All the transactions that are supposed to end up in the cash book are done. Now, I said in my video about the cash book that the debit side of the cash book and the cash column, it should be always greater than the cash column on the credit side. Why? Because you can't spend more than what you have. Okay? You can't tell me you have 20,000 and then you spend 25. It's not possible. So it means that the debit side of the cash book should always be greater than the credit side of the cash book. I mean the cash column. For the bank, it's very possible that the credit side is heavier. That's when you have a bank overdraft. But for the cash, it's not possible because you can't spend more than what you have. So it means that this brings us to the place of what? Cash sales. Remember, we said that transactions are made both on credit and cash. But then we only have credit sales. We don't have cash sales. So this means that we are going to establish our cash sales. So we bring in our equation. We say sales minus cost of sales is going to give us the margin times the sales. Remember, this was gross profit. So the cost of sales we can establish here. We can say cost of sales is opening stock. And our opening stock, if you check into your question, our opening stock is actually 85,000. Okay? And then we add our purchases. And our purchases, if you check back into the question, we established the total purchases of, actually our purchases are 89,000. The 20 purchases, because this is the total purchases. Then, when you add the two, we are going to come up with 174,000. So this one becomes our cost of goods available for sale. Then we are going to less the closing stock. And the closing stock in the question, it is actually, if you see at the bottom, we have the closing stock is worth 5,400. So we have 5,400 as our closing stock. Therefore, we are going to establish our cost of sales figure, and the cost of sales figure is going to be 123,600. So meaning this is the cost of sales. So when you come into this, which is sales minus, now the cost of sales figure is 123,600. Okay, this is what we have: sales minus cost of sales equals to margin times sales. So we have established the cost of sales figure, which is 123,600. Then we are going to multiply by the margin. The margin, the question told us that XY sells goods at a profit of 25% on sales, meaning 25% is the same as 0.25 sales, like this. So when you collect like terms, you're going to have sales minus, sorry, yes, we bring it on this side, you're going to have 0.25 sales, giving us 123,600. So when you subtract sales minus 0.25 sales, remember I told there's an invisible one here. So you're going to get 0.75 sales, okay, equals to 123,600. So for me to get my total sales, I'm going to divide both sides by 0.75. And therefore my total sales figure, after me subtracting this, I'm going to get a total of 164,800. 164,800. So meaning that this is my total sales figure. But then remember they told me that this business, we're supposed to have credit sales and cash sales. So remember what we are looking for here is the cash sales we are going to transfer to the cash book. That means if these are the total sales, we are going to less the credit sales here. So we say credit sales, which is 42,000. So when you less the credit sales, the figure that you get is 122,800. So we have 122,800 as our cash sales. This is how we use the margin approach. So we use the margin to establish the cash sales. Now it means that when you come to the cash book, you're supposed to bring in the cash sales, which are 122,800. Now if you do this, after you doing this, the debit side of the cash has to be greater than the credit side. So it means that that's what we have, and so let us see if it balances up. So when you add up this side, this plus this, you realize you're going to have 164,800, and this side you have 164,800. So once you subtract, you're going to get 21,400. So our balance carried down is going to be 21,400 for this. Then we go to the bank. The bank we have, this is 90,210. So we have 210,000, 210,000. So still this side is greater than the other side. So here we have 91. So 210 minus 91, we are going to get 119,000. So 119,000 is our balance carried down. So by this we are done with our cash book. So this is how our cash book looks like. I hope that has been really understandable. Then the last step is depreciation. And then depreciation, they told us that we should charge depreciation. And the answer that we have in the question is, if you check back in the question, they told us that depreciation on furniture is provided at a rate of 15% per annum on cost. Now, the depreciation that we have, it is on furniture. And now they told us that we are applying 15% on cost. So that means we get the cost, which is 70,000. And once we do it, we are going to get 10,500. That's the depreciation charge that we have on furniture. So by us doing this, we are done with the workings. We're just going to start the number now. All this is a working that's going to lead you to the number. So remember, the instruction was final accounts, meaning that you're supposed to drop an income statement and a balance sheet. But then for you to drop a balance sheet and income statement, you must go through all this. So now we start our working, which is the requirement. So I'm going to rub off this, and then I do up my income statement and balance sheet. All right, now we are going to do our income statement for XY Limited. for the period ended 30th June 2025. So if you check in the question, we had our sales figure. Now the sales figure we established was, the sales figure that we established in the question was 164,800. These were the total sales that we established, 164,800. And then here we didn't have returns inwards, so we didn't have sales returns, meaning that we are going to take this as our net sales figure. Then we say less cost of sales already. We established our cost of sales when we are doing the margin. So our cost of sales will begin with our opening stock, and our opening stock was 85,000. This was the opening stock that we had in the question. We add our purchases, and the purchases figure that we got was 89. This is the figure we established in our creditors control account. So once you add the two, you get your cost of goods available for sale, and is 174,000. That's the figure that we have. Then we less our closing stock, and the closing stock that we had in the question was 50,400. So once you close off this, we are going to get a total of 123,600. So this is our cost of sales. Now we are going to get our net sales minus our cost of sales to get the gross profit. So our gross profit is going to be 41,200. So once you subtract the net sales from the cost of sales, we are getting our gross profit as 41,200. Now they told us in the question that the XY Limited sells these goods at a margin of 25%. Now 25% is on sales, so that means 25% of the sales times 164,800 should be able to give us the 41,200, because they told us that they make a profit of 25% on sales. So once you get the 25% of the sales figure, you should be able to establish the what? The gross profit. Then if we check in the question, we didn't have other incomes, so we are going to less expenses here. So we say less expenses, and the expenses will begin with those ones that we have adjusted. Now the first thing that we adjusted was rent. We had our rent figure, and the figure we got was 4,000. And then also we had the depreciation on furniture. Remember, it was 15%. So we have a depreciation which was on furniture, and we got 10,500 as our depreciation figure. Then also we had size of 15,600. So bring in this size straight from the cash book, 15,600. That was the size figure. And then also we had miscellaneous expenses. And miscellaneous expenses, which was 2,600. Then also we had insurance, and our insurance was 1,000, like this. So these are the expenses that we had. Now once you add up these expenses, you are going to get 33,700. This. So meaning that this is our total expenses figure. Now once you subtract the gross profit minus the expenses figure, we are going to get 7,500, and you're going to call this one our net profit. So meaning this is the income statement that you're supposed to do. So our net profit was 7,500. Then we're supposed to draw up the statement of financial position. So you're going to say XY Limited statement of financial position. Financial position as at 30th June 2025. So we have our columns here. So of course you're going to start with the assets. But this time around we only had one asset. And the only asset that we had was furniture. And furniture had a cost of 70,000. That was the cost of furniture. So 70,000 is the cost of furniture. And then the depreciation figure for furniture was 10,500. So you say 10,500. So once you get the cost minus the accumulated depreciation, it's going to give us 59,500 as our net book value. So this is the net book value for the furniture. And here we only had our non-current assets as furniture only. Therefore, we go to the current assets. So the current assets, we are going to start with our closing stock or inventory at the closure of the year. Now, I said that the statement of financial position, we only bring in items which are at the closure of the year or at the end of the year. Therefore, our inventory here, the closing balance is 5,400. 5,400. Then we look for the receivables figure or the closing balance for the debtors. Now, the closing balance for the debtors, the receivables figure, it was 62,000. 62,000. Then also we bring in the cash and bank. So you have our cash. The cash balance was 21,400, and then our bank. Now these balances, cash and bank, are the balances that we got from the cash book. So the cash book had a closing balance of 21,400, and the bank had the closing balance of 119,000. So these were the balance that we are extracting from the cash book. And then this is all that we have. We didn't have any expense that is outstanding, that is prepaid. Therefore, our total that we're going to get is 252,800. Okay, then once we add this plus this, we are going to get 312,300 as our total assets. So that means these are our total assets here. Then after that, we go on to find the liabilities and equity. So liabilities and equity, we start with the equity. And the equity, we had the capital of 245,000. Remember, they gave us the capital within the question. So the capital is 245,000. So we add it here like this. Then we are going to list the drawings. These drawings are coming straight away from the cash book. And the drawings are worth 5,200. Okay. Then we bring in our net profit here. We add our net profit, which is 7,500. Then we didn't have any other item that's supposed to come here. So meaning we are going to get our final figure as 247,300. So we have 247,300. That's the figure that we have. Then we go for the liabilities now. The liabilities, we start with the trade payables. The trade payables, the closing balance for trade payables, 64,000. This is the closing balance for the payables. Then we had something called rent outstanding. Rent outstanding, the closing balance for rent outstanding was 1,000. Okay, these are the only liabilities that we had in the question. Therefore, the total is going to have, we're going to have 65,000. So once you add these two, this plus this, we're going to get 300 as our total liabilities and equity. So once you get this, it means that your balance sheet has actually balanced. So these are the total assets, these are the total liabilities and equity. So by us doing this was the requirement of the question, but was a procedure that we had to go through. So thank you so much for watching. This is Kevin Davis Accounting. Until we meet again, it's a bye for now.